Welcome to the Jill on Money Show. It is Thursday, Independence Day, and yes, we are dropping episodes on this long holiday weekend, and we hope you so enjoy this because I've got a very fun surprise for you. I was able to sit down and interview a legend of the industry, Barry Ritholtz, and we're going to run the interview today and then also Saturday and Sunday. We're skipping tomorrow because we want to maintain our Friday focus, so we don't want to break format for that. But today, Saturday, Sunday, we're going to be talking to Barry Ritholtz. Now, you may have heard of him because he's got a great blog called The Big Picture. He's also on Bloomberg. He has a podcast on Bloomberg called Masters in Business, and he is also a founder of Ritholtz Wealth Management. And I've known Barry for a long time, but reacquainted with him through my recent collaboration with his partners, Josh Brown and Michael Batnick at Ritholtz Wealth Management, who host The Compound. So without further ado, we're going to sit back, get to know Barry Ritholtz. His backstory is where we begin today. Barry, a lot of the people that I talk to in my world may not know who you are, so I'm going to do a little bit of a backgrounder. So,
fire away.
You were born where?
Brooklyn.
And
despite having no accent whatsoever.
No, none.
That's where I was born, Brooklyn, Williamsburg, New Jersey for a couple of years, Long Island, New York City.
And how'd you get into this business?
By accident. Totally by accident. Undergraduate, applied math and physics.
Hold on, stop a second.
Yeah.
Applied math and physics.
Yeah.
What were you thinking at that point? Like, what did your parents do?
My dad was a placement officer originally for scientists, engineers, back when people would go to third parties to get jobs.
Okay.
Like, he did that. And just always good in math and science. I assumed engineering was my path. By the time I'm a junior in college, I realized, hey, I was pretty good at this in high school and not bad at it in college. But those guys, they're really good, and I can't keep up with them.
Isn't it interesting when you go to college and you have some sort of comeuppance when you were a golden child in some way?
Big fish, little pond?
Yeah, it's awesome because it's like that moment where you kind of look around and say, these people are phenomenal. I had that on the soccer field.
Right.
So when I went to college and I saw these young women who were not just skilled, not just in great shape, not fast as hell, but like had the whole package together. And I literally looked around and I said, I'm in big trouble here. So I ain't the star no more.
That's really funny. You know, everybody is working within a little market. And as that market gets bigger and bigger, suddenly you realize you go from, hey, I'm the fastest guy on the track team, to, oh, those guys are really fast, to, I'm an amateur. Those people are amazing.
Exactly.
And that's how, you know, stars are found.
So you're not going to be an engineer. You're coming out of college. So what are you going to do?
I have no idea. And, you know, if you're out of college and you're a Jewish kid from Long Island and you don't know what you want to do, the default is almost go to law school.
Yes, of course.
Right?
My mother's so disappointed I never went.
Right? And my mom is like, you have to do something. What are you going to do? And I was working. I had a job. I worked all through college. I put myself through college. I put myself through law school. I found that I loved law school. I loved the intellectual challenge of that sort of problem solving. I hated that so much was dependent on either a judge or a jury. Like, wait, I don't know what the judge had for breakfast that day. I don't know if he's hungry and cranky or if his team lost over the weekend and my client's going to get screwed. By the way, all those things are actually true. Sentencing is, you don't want to be the last person.
Yeah, but you didn't have to be a litigator. You could have been a corporate lawyer doing M&A.
I started out as a corporate lawyer. Tedious. Like, the blog is called The Big Picture because it's not called picayune tedious details that I have no interest in. And so I had a client that was the predecessor firm to E-Trade.
Okay.
And I was out in their office one day, and I get a tour of the trading room, and I'm just fascinated.
This is out in the Bay Area?
This is before they close. So not long after I start, is the firm that was the predecessor to E-Trade.
Which is, what was the name of that firm?
It's
all right.
27.
Good old what's his name?
I worked for a couple of guys, one of whom goes on to be very senior at E-Trade and then launches Marty Averbach. Launches ISE, which was bought not too long ago for a few $1 billion by Deutsche Börse. I'm still friendly with Marty, lives like a half hour from me. And I work for these guys. I started as a trader. And was unable to go. The guys who went to California did really well when E-Trade closed all their regional offices, rebrand, and roll out as essentially the first online trading shop. I want to say that was like 96 or 97.
So
like
you're
way
working,
back
but when you're
when.
working as a trader, what were you trading? Stocks?
So you're trading off flow of the whatever orders are coming into the office. Plus, you have a certain amount of discretion where you can trade for as many minutes, hours, days as your buying power allows you. And so you're just trading equities. Whatever's moving, you have a holding period. It could be seconds. It could be minutes. We set up a couple of really interesting algorithms because back then, Instinet was a different system than NASDAQ, was a different system than SOS. And you would see price differences. Wait, this is $10 on NASDAQ level 3, but you can buy it for $9.75 on Instinet, and you could sell it for $10.25.
Like it was just very easy arbitrage in some respects.
For a while until the
right?
big guys figured out with big iron, high horsepower programming and a lot of IQ points, they figured out how to capture all that. Every inefficiency in the market
Got squeezed out.
eventually gets arbitraged away because the people with the capital, the know-how, the more I spent time on a trading desk, the more I learned about how the advantages of being a longer-term investor.
Okay, so were you a good trader or not so good trader?
Depends on the month. Some months I was great.
Yep.
Probably some months less so.
Okay.
The thing I will self-identify as something that I was very, very good at, which is kind of unusual because it's very counter to the rest of my personality, was I was very aware of how much I loved finding that vein and hitting it with the dopamine thrill of making a trade. And by the way, not even a good trade, just like so exciting to be in the mix of it. And when you make a winning trade, oh, what a thrill. And my greatest insight was, dude, you're not doing this for P&L. You're doing this for thrills. You should be aware of that sensation, which is not disciplined, not focused on profitability. But, on Tuesday nights, we would take the quote server and take it offline after the market closed and everybody submitted their P&L for the day, which literally we would save to a 3.5 floppy and walk into the head trader's office. We used to call that sneaker net. You would literally walk it in. And then we would take the quote server and turn it into a Quake server, which was one of the first multiplayer games. And you'd just get lost in it. You'd play for hours against all the other traders. And at a certain point in the Quake experience, I'm like, this is the same thing as trading. I'm doing it for fun, not P&L. And that, I want to say late 96 or so, is what sent me down the rabbit hole of behavioral finance. Why do we make decisions? Why is the guy next to me doing great when the guy on the side is getting killed? And then next month, he's doing great and he's getting shellacked every day.
Yep.
And everybody is more or less reading the same thing, doing the same things. Why the wide dispersion in outcomes? And it comes down to all of these behavioral things. So before Kahneman won the Nobel in, 2002, I had been reading people like Cialdini, Gilovich, who wrote a book, the first half of which is just pure behavioral finance, How We Know It Isn't So. And back then, it wasn't like Google Scholar existed and you could get any published paper. You would have to go to the library and say, I'm looking for this, and they would either have it or they would say, oh, you have to go to Stony Brook Library or NYU, their library will have this paper.
A lawyer, a trader, and how did you make the leap from trader into investment advisory business?
I had a very lucky trade that made a bunch of money that could have gone the other way. Somebody announced something, a takeover. I went wildly over on CNBC. I went wildly over, and then the stock is halted, and all of a sudden I have like way more stock than I should have, and after the stock reopened for news pending, the deal went through. I think that was WorldCom MCI, and it was.
So
I was
is this
on
99?
the right, something like that, 98, 99, and it was pretty clear to me that hey, this worked out, but it was dumb luck. There was no skill involved. This could have just as easily gone the other way, and then I didn't have $5 million if it went the other way. That wasn't going to happen. So it was kind of a wake-up call in addition to that self-awareness that, hey, you're doing this for fun and not for P&L. And so I started looking for something in the world of research where – so along the same timeline, I am especially, disorganized, always attracted to shiny objects and just all over the place. And I'm self-aware of that. So every day before the trading day opens, here's my list, which I would tape to my big old monitor back before there were flat screens, my big CRT. Here are the economic reports that are coming out. Here's the consensus. Here's what I think is going to happen. Here are the earning reports. Here are the stocks that are trending. Here's what's above or below their what's changed above their 50-day moving. Like I'd have a whole list of stuff. And it was a page or two of stuff. And these are the 5. I wouldn't read the paper. I would skim the paper, the Wall Street Journal, the Times, the Washington Post on the way into work. And I would just figure out which stories I wanted to read later. I learned never to read stuff before the trading day.
But this is still
in
your predecessor to E-Trade. You're still there?
No, this is as a trader. This is me working as a trader.
Okay.
And I would just tape that list to my monitor. And that list, first it got Xeroxed. By the way, listen to the anachronisms in this paragraph. It would get Xeroxed and shared around the office.
Or wait a minute, you didn't say mimeograph, which would put us into a different era.
That was when I was in high school.
Yeah, exactly.
It would get Xeroxed and shared around the office.
Yep.
Then later it would get faxed to other offices. And finally I'm like, all right, if people want this, I'll put it on an email list. So that was getting emailed. And then late 98, something like that, 98, 99, I started putting it up on GeoCities.
Right.
Which was pure HTML, how to teach myself how to do that. And GeoCities eventually became, in 03, I moved from GeoCities to TypePad. Six Apart was a software company. I was a beta tester for them.
Okay.
I was a beta tester for Google. Hey, do you guys need some money? I'd love to invest in you. I got a very amusing, thanks, we're good.
We're all set.
Back from
Great.
And then WordPress in 08, and I've been on WordPress, ever since.
So what I'm trying to understand is as I'm thinking about your career and I'm looking back and I'm trying to say applied math physics guy who
switched third-year school to poli-sci and philosophy.
I get that. So you find the passion in the liberal arts.
Not really.
But
just like tired of work, like physics is labs and applied math.
Yeah, it's hard.
There's like homework.
It's hard.
You can't just kind of walk in and skip.
But you also have like an emotional body. You're aware of yourself. You're self-aware, which is
on occasion, most of the time oblivious, but occasionally insightful.
You understood that there was something about how your DNA that made you somewhat susceptible to being kind of hooked on the high of trading.
Human.
Right? Yeah. And then you kind of say, wait a minute, let me think about things more holistically, right? So now we have the economic reports and the data, how you sort of see the world. And now you write about it. And you're a good writer and you get press and you are enamored with that as well. Where does the idea of how can I apply this to regular people, where does that come in?
Let me figure out how to explain this. So I get offered a job as the assistant researcher to the head of research for a firm. Back then it was Prime Charter. Eventually they become Oppenheimer. And the guy I worked for, Larry Hart, was a former I almost said Lucent. AT&T Labs, Bell Labs.
Yeah, sure.
He was a software programmer for them, and then eventually became an analyst at covering technology. This was like the last, the last part of his career, and I was his researcher. And he's like a real hardcore geek. And my skill set is, all right, I have enough, science that I can understand his technical jargon, and I can translate it into English for the brokers. That they were a stock brokerage, Prime Charter.
Okay.
And so I remember pretty early on, and I'm sure I'm getting these dates somewhat mixed up. AOL was like $6 or $7. Hey, this is the on-ramp to the internet for the average American. So I had to take all of Larry's jargon and translate it into English. And then the other big thing I wrote up for these guys was, in fact, one of the senior brokers had come over and said, listen, Barry, we love Larry Hart. Nobody understands a damn word this guy says. Can you just pick a couple of his stocks and turn it into English so our guys can explain it to their clients? Sure. So AOL, on-ramp to the internet, and then EMC. Every credit card transaction, every option trade, Big Iron has to store all these digital transactions.
Yep.
They're the ones, I think EMC at the time was $7.
Massachusetts-based company.
Yep. Now part of VMware. I
Yep.
think Michael Dell owns some or most of it. So anyway, I did that. I went from there to another firm. I ended up at Maxim Group, which was a broker-dealer with a syndicate desk and a lot of brokers, and became their strategist. And what was probably that was August 2002, what was probably the single best, luckiest break of my entire career is Ed Rose was general counsel at Maxim Group. And I'm writing on GeoCities. I'm moving this over to TypePad. And one day, and every Monday, I'm doing the Monday meeting with there was a team of like 4 different people. Fixed income would say this, syndicate would say this, the head of brokers would say that. Barry will give us a few words about the market and the economy. And I would get questions all the time. What was that about this? And can you so I just started posting all that on the website. And to my great fortune, Ed Rose pulls me into his office and says, listen, I'm okay with you sharing all that stuff online. I understand what you're trying to do. So I know people are, the joke was, brokers would say, what's the stock symbol for EMC? And they weren't kidding. They were serious about it. But so in order to avoid that, everything would go up online. And Ed, to his credit and my great fortune, said, look, you could put all that stuff up. You don't need legal or compliance pre-approval. The caveat is no buy or sell recommendations.
Okay.
If you want to talk about Walmart as indicative of the retail sector or micro, you can mention them, but you can't say buy this, sell that.
Right.
I'm like, I'm really not doing that anyway.
Okay.
There's no glory in that.
Yep.
If you're right, the guy who followed your advice is a genius. And if you're wrong, that Ritholtz is an idiot.
Right.
So I've learned cocktail party chatter. Someone wants to talk to you about a stock. No upside.
Okay, so again, tomorrow we are going to go back to our Friday focus. It's going to be perfect. I love doing that. And then Saturday and Sunday, we are going to find out what happened to Barry in the lead up to the financial crisis. And then on Sunday, we're going to talk a little bit about his life at Ritholtz Wealth Management. So I'm so glad you were able to join us. I hope you have a wonderful Independence Day. As always, if you've got a question, just go to JillOnMoney.com, click the Contact Us button. Let us know if you would be willing to come on the air live. All of our content lives at JillOnMoney.com, so check it out. Have a safe, wonderful Independence Day. And as always, do something nice for someone else today. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.